Hey guys, just wanted to go over a few different things today. Gonna try a market wrap up where I go a little more in depth on what I think about the markets and provide a lot of color to what's going on. So I'm gonna start off here with the New York Empire State Manufacturing Index and what we got for results today. If you look at this, this is pretty bad. So there's more. First off, manufacturing index, these surveys, there are more regions of the country than just this. Texas had a read just about a week ago, covering January. Excuse me, covering in January, and theirs actually looked like it might be more on recovery. It was still negative, but it looks like it was recovering and starting to bounce. So they're looking better. But this read for New York was the worst we've seen since the pandemic, and not just by a little bit. Negative 43.7, consensus negative 5 or 9. That's bad. This is one read, though, so we can't judge everything by this. We need to look at more. We need to really eye unemployment. We need to really look at any signs whatsoever that, jobless claims, anything that can significantly show that the economy is weakening. We need to keep an eye on it. Manufacturing, I think that weakness in China is also bleeding into the United States. They're creating deflation. That's good and bad. I'll explain that a little bit more later, but I think that that's going to be a prevailing theme. I'm going to jump up through here, see if there's anything else I wanted to talk about real quick. Oil. So it's important to notice here on oil, and I'm actually probably just going to see if I can switch to that chart. Let me see if I can find it real quick. Oh, I got to switch to a different one. 1 second here. Let me change. I'm going to stop that. Sure. So I'm learning all this stuff. I'm going to pull up my Bitcoin window. Oh, wait, which one's Bitcoin? There you are. Is that it? I think that's it. Nope, that's it. All right. So, yeah, that's what I'm looking for. All right. So I want to pull this up so that I can show you the actual chart too. All right. Where to go? Oil. Let me go to that. So what I wanted to show you on oil is the weakness that I'm seeing. Here, if you look here, I've called oil really good too. Like I've called tops at multiple different areas on oil, and also called it almost perfectly, honestly, for a couple of years. Dollar, I'm pretty good at, not as good as oil, but I've called it like to perfection. This one. So the thing I wanted to show you, you should see our support line represented in green. You can see in red, this is resistance lines. These yellow, orange, and purple lines, they're moving averages. They're the same across all my charts. Purple is 50, yellow is 100, 200 is orange. That's going to be consistent. Right now, you can see that purple, the 50, the shortest one, the one that moves the most, is actually starting to push down on this level. And then there's another rule on support lines and resistance that if it touches, the price action touches it a lot, it's most likely going to go through it. So you can see here recently, we are just eating this line. We're chewing it up. We want to go through it like Pac-Man. We want to bite this thing down. And you can also tell that from the RSI here, where we've got bearish divergence, and from the MACD, where we have bearish divergence. So this thing wants to go lower, and it probably will. So not inflation, deflationary. Deflation can actually be good, and I'll talk about that more in a bit. Let's look at broader markets real quick. The S&P, does this look weak to you? Does the S&P look weak to you? I don't see it. I see a cup and handle, a beautiful cup and handle that broke out, found support above the next fib line, just like it found support at volumes under here, and then turned that into support up here under the fib, and then just went straight up. It's establishing a base right now, and it's looking to grind higher. What else can I show you here? Let me show you the dollar. So the dollar, again, I've called the peaks on both of these. That's why these little curves are sitting up here. And then I showed breakdown areas where we're getting ready to break up. And then I called the peak, and then we broke down, and you can see all the support lines here. And then you can see where we broke up. This is what's killed us, right? Since the end of the year, this is the end of the year. Dollar go up. What happens when the dollar goes up? Stock markets go down. You've got foreign exchange headwinds for international companies. You just got a lot of stuff that makes the market weaker. And that's what happened, right? We saw bond rates go up, and those bond rates, let me see, I can probably pull some of that up too. I might not have. Oh yeah, I know I do. Let me grab it. So bond rates here, if we go out over the last like year, you can see where again bond rates were going down into December, and then they started ticking up. And just like the dollar, this applies pressure to the markets and brings down risk assets, which we've seen. Right, we saw Bitcoin get crushed. We saw miners, Bitcoin miners, get really beat up. We saw ARKG get beat up. We saw fintech get beat up. That was because of all this. What I wanted to show you here is that, like oil, we have the potential for bearish divergence here. We might not. We could break higher. The measured move, if you look here, this is a left shoulder. This is a head. This is a right shoulder. We busted up above the 200 and just kept going straight up. The measured move here, and I'll just draw this out real quick. Let's do this, right? That's the neckline up here from the breakout of the shoulder. So we could actually go like probably up to 104 or something. So we could maybe be, I don't know, since from this whole journey, maybe we're already 60% of the way there. Maybe we have a few more down days heading into the latter part of the week. Maybe we get an update on Friday. This is all possible, or we could reject before this happens. But I'm saying the dollar is going down soon, or at least topping out. And I think that we'll see a drawdown there as well. Something else I wanted to point out is global liquidity. My friend Mike Howell from Cross Border Capital, he's brilliant. I'm getting ready to read a book of his called what is it called? Currency Wars? No. I don't know. I'll have to pull it up. I don't want to show you the book order. Let me see if I can find it. My bad. Capital Wars. Sorry, I've been reading too many books. That's from a few years ago, but I'm very excited to see what it has to offer. Michael is a brilliant man, and like Tom Lee and many others that led me to make a lot of money last year. 2023, I realized probably about $1.5 million in gains. Made even more than that too, and unrealized. But I did lose some of that heading into this year because again, I'm levering deep into Bitcoin, so I'm okay with losing money because I have some vision that's a year and a half out from now, and I've got a 15-year track record of Bitcoin, new inflows through the Bitcoin ETF, transaction fees that are higher than they've ever been at this stage of the cycle. It's just beautiful, and I'm excited for what's coming. Despite some price action for Bitcoin miners going down today. None of that matters. I've already explained in my other video that Bitcoin miners will do a multiple of the underlying asset. It's how it works. It's how it works with mining everything. So we won't rehash that again. But what I wanted to show you here is you can see in March of 2020 where global liquidity plummeted. Initially, it was fear, and we hadn't started simulating yet. We were getting ready to do that at the beginning of probably like 4 weeks in, 5 weeks, we started talking about stimulus and checks. Anyway, so you can see the stimulus. Wow, what a line. Dramatic increase since the 70s. Like global liquidity was taken off. And I'm not talking about like beginning of the 70s into 60s. I'm talking like, mid to latter part of the 70s, just this big pump right here. Anyway, so this just, if you bought the pandemic dip, you made so much money. I remember Jeremy Lafave from Financial Education. He's a great guy. He made a ton of money during that time. I was less focused. I was more on Bitcoin, and then it had the top of its cycle. I did good there, but obviously Tesla kind of topped out, and I jumped out. But I didn't do a good job buying in stocks. That's about the time where I really started to focus more on stock and macro, and really up my game so much in the last couple of years. It's amazing. That's why I want to teach you guys this stuff. I think it'll up yours too. Anyway. So we had that peak, and then we went from inflation is transitory to, oh shit, inflation. And then we did the tightest tightening or the strongest tightening in recorded history from the Fed. So that neutered the top of Bitcoin. If you don't know that, it did. Bitcoin would have went higher, but it stopped, and it stopped because of that tightening. And I can show you that. Like, if you look at this previous cycle where it just really, the 2017, it went up a lot, you can see that it wanted to do that in 2021. But then right over here, when it was getting ready to go up again, latter part of 2021, we decided, hey, it's time to have the most aggressive tightening in history. And you can see how quickly that brought Bitcoin's price down. Back in 2017, there was like some guessing, will they, won't they? Maybe we'll recover and this thing will turn back up. There's hope through here. And then eventually no hope and a plummet. But this time with the quantitative tightening, it's like, nope, top's going to be right here. We're not going higher. We're not getting to 80, 100. We're not doing that shit. We're going down now, and we're going down straight. And that's all you got. But down here, November 2022, kind of beginning of 2023. Let's go back over here. What happened with the global liquidity? We started going up. This is why I made so much money. This is why I made millions last year, is because I paid attention to Michael Howell and I paid attention to global liquidity, not just this metric, a bunch of them. And they all told us the same thing. They showed us that it was going up. And if you follow just global liquidity, you can get rich. And here's what I want to show you on this. These cycles, the big up, the big down, especially with quantitative easing, tightening, and just all the ways that we print money, these, when they start going, they start going. In the 70s, when this started going up, it didn't stop. And we have a ton of reasons why global liquidity is going to increase. My theory about China being really bad off, and I'm right about it, guys. There's people that have been saying China's scary for years and years and years and years, and it's going to fall apart. They were just early, really early. I don't like to call things until it gets closer to it. I'm not even calling for a catastrophe now. I'm just saying it's going to shit. And if it's not getting better, they have to put money into the system. And them putting money into the system, well, while they're dealing with capital outflows, whether you're talking about direct investment or just people leaving their stock market, that money goes into Bitcoin. That money goes into crypto. That money goes into US dollars, which is probably why we're seeing the dollar go up so much. So again, we're seeing global liquidity and it's happening in a big way. You want to be on board for this. And Bitcoin, did I even talk about Bitcoin yet? I did not. Dude, let's talk about Bitcoin. This could drop further. This could be a bear flag that we're seeing right here. Let me draw some lines. It could be like this, right? It could be like, and I should probably make these a different color. It could be like this, where we're going to break down further and go to 38,000. That could totally happen in the short term. But I'm going to tell you what I like, okay? And again, maybe we drop. I said markets could still go further. They could drop. So if that's going to happen, if we're going to get a bleed for, a couple more days, who cares, right? But if we go down to 38K, I'm buying options and I will relay them to you. I just need to get in there first. I get front run by people and it sucks. So I'll probably do a video. I'll probably front load what my choices are. And then I'll convey that real quickly in a video and just show them. And then tell you which ones I bought right after I get done doing it. I just can't let people front run me. It sucks when you're telling thousands of people. And I want to put it in the video and not put it on X, because I want the people that take the time to actually click on the video and try and find it. I want them to be the ones that benefit if anybody does. And caution, let me throw out a huge caution. If I give you options, the reason I showed you how to look at an options chain and the reason I showed you how to look at a calculator is so that you can check this stuff for yourself. Because, and I'll warn you of this, this happened before too, when I was making a bunch of money off of Palantir and Tesla and Meta, and then later SoFi. And then I started making money on some of these other plays too, before they started dropping because of global liquidity, taking a breather for a little bit. I tried to warn people like, hey guys, I just looked at this options contract I was in. It's going up a lot. Don't buy it now. Please to God. If I show you give you the keys to the kingdom and show you contracts and show you what they're valued at least take the fucking time to pull up the calculator and see if it's gotten worse. If it's went up a bunch, don't buy it. Don't buy it just because I told you I did. Run the calculator. I showed you how to look at different option chains. Maybe you go to a different one and you make money off of that one, and you don't have to worry about a bunch of people jumping into something because I did it. So use your brain, use the tools that I'm showing you. And if you have questions, throw them out there. I want to help you guys. But here's what I wanted to say. I wanted to show you something on Bitcoin that I like. And again, this could break down, but here's what I wanted to show you on this one too. We saw a massive drop. You can see these volume candles on the 4-hour. Bitcoin said, no, you idiot. The Bitcoin ETF is a bad thing. It's bad for a couple of reasons. One, you didn't think about grayscale outflows, because there are some people that are trading grayscale and IRAs that are tax advantaged. So they don't have to worry about getting a tax hit. And they don't want to pay a 1.5% fee when these others, in some cases, aren't charging them anything. for a fee for like the first 6 months. There might even be longer than that, or it's 0.25%. Why would you pay 1.5? This is kind of one of the things I warned about with Grayscale is people are going to want to exit it. Like you're going to want to get a better deal. So anyway, so that happened. I didn't really calculate that well. Then also I didn't calculate that alts would explode because people in the crypto sector would immediately start jumping to Ethereum and altcoins. I did get the water. Oh, it's a Bitcoin mug too from a good friend because you got to have Bitcoin, right? Should have been gold, but that's okay. It's still beautiful and I love it. But anyway, I digress and I might have lost concentration here. My whole point is, and maybe I did, Bitcoin, I think, is trying to break higher. You can see this in the volumes. You can see where it broke down hard. Oh yeah, the ETF comment. So I didn't pay attention to the fact that the ETF would be an issue with Grayscale and we'd see outflows. I also didn't pay attention to the fact that Coinbase would be using Bitcoin reserves. And so I don't think they touched their spot yet. I think they've literally just got these guys coming to them in the afternoon and saying, hey, we want such and such Bitcoin at this price because this is what our average is. And they get it and they give it to them. And that's the trade. And I don't know all the mechanics. It still seems fuzzy. It seems like most people don't understand how the mechanics work behind the scenes. I've listened to a few ETF guys and I think I grasp it, but I don't know that I totally do. So, but my whole point. So I didn't count on the fact that might not touch spot prices, and spot just means the market. And so it might not impact the market. So if you're seeing outflows from one area, and then if people are leaving Grayscale to go to another fund, that can take a while to transfer that money. So the first week or so, totally makes sense that this stuff drops because you've got downward pressure. And then at the same time, you don't have upward pressure because the Coinbase stuff isn't doing anything. So I think that's what happened. I really do. But my whole point, so you had this massive sell-off. You could see with these wicks that we wanted to go higher. And I think I need to refresh this a little bit to get I don't know, maybe I need to, 1 second here. I might have to, yeah, there we go. Sorry, it got so dark, guys. I got to figure that out too. But you can see these wicks where it shot up. You can see this tweezer. You can see what kind of is almost like an inverse head and shoulder, where maybe we back test here and then we break higher and start. And our measured move would be up here towards 45. So that might be coming. Or again, maybe we break down and we go down to the 38,000 range. One way or another, I do think that the downside risk is lowering. I think global liquidity is the reason that's lowering because it's going to go up. I think I didn't touch upon it in oil, but I think that the Red Sea and all the stuff going on there, if that can't drive up the price of oil, then something's going on. And again, I think if you look at HRC steel, you look at oil, you look at a lot of these commodities that China's one of the major buyers of, excuse me, they're going down. And so you can see reflective of all the charts I post. I might have to do a China video because there's just so much data with China that shows how negative the situation is there, even though some people are like, hey, buy Alibaba. Cool. It's going to go up. It's great value. You guys are going to get fucked. It's just the truth. I wish it wasn't the case. I'm not saying this to be a dick. I'm saying it to hopefully save you some money. And in the future, hopefully I can get you to understand why. But oil's going to break down. We're getting deflation exported from China. With deflation being exported from China, it basically makes it to where if the Fed, it makes it to where we don't have to worry about inflation. We don't have to worry about inflation because they're exporting deflation to us. So if we don't have to worry about inflation, let's say that the economy hasn't fallen apart in the next month or two. Let's say unemployment hasn't disintegrated. Not loving the manufacturing index from New York, but let's say that Texas starts going up. Let's say that real estate is kicking in. I had a guy in one of my posts say that he's a loan officer and that he saw refis ticking up 50% month over month, or I don't know what it was the time frame the year, but he said they're seeing a large increase already in refis and home equity lines of credit. So if people are already getting excited and starting to do this stuff, the real estate market's going to come back in the spring too. So you can see our market's doing okay. Unemployment hasn't went up yet. If we don't see a rise in unemployment in a couple of months, but we're talking about lowering rates in March, and we don't have to worry about inflation, because if you lower rates, then it's like, inflation might kick in. Well, China's not going to let that happen because they're falling apart. And And so I don't think we see inflation as a concern. And if the economy maintains, I think we're taking off. I think everything shows that we're ready to go risk on. I think when I look at the S&P and the NASDAQ, look at this. This is consolidating to go up to 5,100, 5,200. So Tom Lee has this thing about the second half of the year. I think he's wrong. I don't say that very often. I love Tom too. He's brilliant. But I actually think it's not the second half of the year. I think it's going to happen in the first half. I think it's maybe a second quarter, but or maybe, I'm sorry, February, March, heading into second quarter, into first. But I think we're going to start running again. I think it, for all the reasons I've given, could be wrong. I'm trying to pass on what my thoughts and my reasoning behind it and get you guys to look at bigger picture views instead of just like, oh, hey, here's some lines, should go up, should go down. TA doesn't mean shit if you don't understand the world that you're looking at. It just doesn't. If you don't know the macro, if you don't know the fundamentals, if you don't know the micro to the macro, sorry, I had to do that, then you're gonna have problems and you're gonna have shitty TA. And I just want to be more right than I'm wrong. And that's why I use these tools. And that's why I learned the macro a couple of years ago. I hope you've learned something from this. I was all over the place. I didn't really storyboard it. I just wanted to shoot from the hip and do something cool. And hopefully you got some of that. I'm probably going to do more of these. I'll probably try and do it more structured, have some chapters, do a live stream, have you guys ask questions in the future. I don't know if I'll do that right away, but I want to, after I write up my market wrap, I'm probably going to try and make a video so where I can talk through some things. And again, maybe we'll go live. I hope you guys get some enjoyment out of this. Give me feedback if you have it. I know the video still sucks. I'm working on it. I'm trying to get it better. I've got the 1080p pack. There's still just some video codecs issues. I'm hardwiring my line here for my internet. I'm just doing everything I can to try and make it better, but I know it sucks. I'm gonna get there. But anyway, if you guys have any input, put it in YouTube, or I'll be posting the stacks, so put it in there too. Otherwise, you guys have a great night, and thank you for listening to my rant for 22 minutes. Bye.